Hello guys, hey, how are you? Good to be back with you talking crypto. We're on the Wacom and we're going to do some drawing for you. This is BTC. Now I've chosen in one of the lesser used exchanges because of I've got so much drawing on my other charts. Don't want to lose it, but it's a bit too cluttered. It's for my premium group. They understand why most of the lines are in there. This is, believe it or not, the less cluttered chart. And it's cracking, and it's Bitcoin versus the dollar. So this is what we call the God market, as you've heard me use that phrase before. It determines generally for me, because it's quite a simple market, crypto. It's either contracting or it's expanding generally, and Bitcoin is the gateway drug. Things that are going to be expansionary for all the coins have to start usually with Bitcoin. In short, Bitcoin permissions the market to move. And it's worth reminding ourselves also a little bit more about the bigger time frame. So if we just, before I get into too much detail here, you may recall I did a segment where I spoke of volume by price, why this was such a significant level, that red and green line overcome, and why when we ate our way through that, it was ostensibly bullish and we reverted strongly bull. That was a very powerful break as well there on good supported volume. We're going to be coming back to that. But we've now puffed out a little bit. There's two big histograms since the death of the bull market through this bear. There's two big histograms on your volume by price, and we've fallen below those. In other words, it's been hard to hold the dizzying heights of the 9K, those two blue lines, 8 and 9K. We're actually sub the 8K now, and this is part of volume by prices where you've had a great degree of market participation at price levels. It's underutilized, it's exceedingly powerful, and we use it with the volume on the particular day. And of course, it highlighted for us why this would be such a key significant break. You'll also note I've got the BitMEX volatility here. Supreme low volatility told us an expansive move. We're one of the only folk that were saying this is going to sell off, and we got a sub 4K target out there that was attained. Anyway, let's get to the present. I just wanted you to know where that gray line came from. Those were two really big horizontal histograms that we've not been able to hold above. And there's a degree of hollowing out. You see the red line is where we're trading now. There's a degree of hollowing out until we get here. We call it the voids and vacuums of participation at the different price points. And you can sometimes slip quite strongly through those until you bump into those. That said, they're not super voids. They're not voids like down here. They're just 30–40% less than the two clusters of Manhattans over here, the horizontal Manhattans here and here. I should be using the pen already, shouldn't I? I'll get it up quickly just so that that's clear. So that was one of our most supremely participated zones, and that was 2. And that's what we're calling your voids and vacuums. And as a result, we've failed to hold above that and we've slumped back. So does that mean a visit back to these levels where the red and green lines are, which we called the soft and hard ceilings when we were calling short in an environment where everyone else was calling bottoms? And when that ceiling, the soft floor went and the hard floor went, we had two layers at the top and 2 at the bottom. We knew we were in and all our limit orders were triggered, and we had a very pleasant trade. But people hated us for shorting during that period. Because they all thought it was a bottom and it was a real destroyer. There's always a final little twist of the knife. Let's bring it up to present though and get into where we are now, and also more importantly what we were saying recently on a previous Crypto Sniper. Sounds like I remember watching Fonzie, and last time on Fonzie, what was it? What was the name of the program? You guys are gonna have to remind me. It was a long time, and there he was combing his hair, or he was on a skis jumping over a shark, or doing something bold or brave. Let's have a look at what we said last time. So the key element of the structure here, we mentioned that we'd been accumulating on the basis of a break, but we also pointed out that there was early buying coming in aggressively under there. In other words, this was a strongly ascending line. So this was the previous YouTube. A strongly ascending line means a number of things with our structure type patterns. This gets into HVF method. There's a lot more to it. I can't explain Freeview into all of that, but basically there's one of two things. It becomes an extremity. Instead of making target normally, If this is just a small chewing of an eventual tsunami, you absolutely melt up and you overperform through target. So what we tend to do there is we position close 60% at target, and then we enjoy the gravy train of the 40%. The dichotomy is, instead of giving you consistent target performance, it either overperforms and is super strong, or it does what we call a fizzle. And this is what's happened here. And some of the clues were there, and I alluded to it. Whilst we were in the money and we were feeling fairly perky and bullish, what I highlighted is this volume was not as high as the volume on the sell-off over here. And that's typical. In other words, some of this buying that we were illustrating was taking some of the fizz out of the eventual break because of its ascending structure. Too much energy expended coming in under the lows, coming into the lows, too many people eating in the pattern, not the built up pressure and constriction we like in our volatility squeezes from both the top and the bottom. And as a result, when the break came, there was less pent up energy and you get a fizzle. And a fizzle is exactly what ends up happening. We made our second interim of 8867. In fact, we poked through 9. So let's go back to the live chart now. Having just tied it into where we last spoke to you. So we made the 9K actually there, and that was also very, very bearish. But I'm going to just extend this line for you. Whoop, not that one. Go back to where you came. That was the 8K line. We want to leave him there on the 8,000 number. If you'll get as close as possible. I wanted to grab that one. So we call that a grind line. You'll learn more about that. It's not a trend line. It doesn't mean that's a trend and you're in a bull trend. It's a grind line, and this was where the aggressive buying was coming in. So with that aggressive buying, let's just redraw this in for you. Put it in. What you're actually seeing here is that coming up there. I'll make the pen a little smaller as well. So coming in, chasing up under the markets, buying dips early, chasing up under the markets. That satiates that buying pressure for the breakout. So then you get a moderate volume break instead of the higher volume that you've had here, and you get to that interim level 2 where technically we call it a fizzle, and then you want to get out. In other words, there wasn't sufficient strong, and then we got lots of spotty weak and a sustained period of congesting here. And then the final other warning, apart from the lower volume and the lack of follow through once we'd made our second interim, that's not drawn on there, but it was 8.8. I put it a pen line there. Learn HVF method with us if you want to know more. Was the slump, and then we had another little attempt at wind up there. I'll drop a time frame, you'll see it better. And then the run for 9. Key levels of significance, the round numbers. So you've got the 8K and the 9K. We're bouncing between the two levels. Bang. Very psychological. Where are you going to run into take profit orders? People are people. Round numbers are round numbers. You run into a wall of numbers. And remember always that key levels, the HVF method law of key levels of significance is key levels of significance are always just run. Because when you have a cluster of orders all designed to execute, think of that volume by price with that tall histogram, all trying to execute at 9. What actually ends up happening is they can't all get filled at 9. So pending orders, lots of people reacting from alerts in and around 9 means actually you get bumped through it, but then you get absolute exhaustion, especially if you've had all your buying coming in here. So what then ends up happening is you have a fizzle. That was your final take profit point. I got some out there. I got some after that slap back when it was back down there, and then I didn't get enough of my BitMEX. I only closed about a third of it, and I ended up having to get the rest out there. So my execution was poor on one account. Thankfully on others I got out very early, so it was a quids in and a profitable trade. And in fact I've done a mini series that I might make freeview of the BitMEX trade up through the whole event. To that, because we'd got in early, we'd got in at relative low 2, and we'd accumulated here. Even the latest entries getting out there were good for us, and that's the value if you bought right. But we were aware of this, and I should have done better. We should have done better. On 2 of the accounts I executed well. On the third, it was just so much more to unwind, and you have to deal with it. So I was quite big sized, and I was getting quite a few rejections, and I waited. I didn't want to chase the market down, etc., etc. Looked for basing points, so you're giving some back. So that was my experience with this trade. So it was very profitable, but not as profitable as it could have been. But the scenario, I was got some satisfaction in that we were accurate and forewarned, because we discussed this inside the community extensively, that a fizzle was potentially on. And that's what we describe when the funnel then runs. Our funnel, first it supported in the funnel, let's have that back. It supported and it gave you that rally, so you got a second chance to get out. This is a bit of a broadening pattern, downward looking, by the way. And then you got that flagging over there. Wow, that was just a second, a third, and a fourth warning of further continuation. And then we've run this level here where the 7.9 is. That's what we call our funnel squeeze point, and that's just an indication of bear reversion now for the time frame under review. Remember that it's for the time frame under review. On the daily, we're still in a resurgent potential new bull. On the 4-hourly and the hourlies, now we're now in lower lows and lower highs, as you can see. So Dow theory dictates. Now this structure was what I was going to warn you about, and I don't like it. It means, when I say I don't like it, there's no good or bad price behavior. I wouldn't like it for longs. In other words, it's convex. It is a weak reaction, and it continues to have high momentum sell-offs while very weak grinding upside. And you're on the bottom of what I'd call a broadening downward facing megaphone, and you're leaning hard. So at one point there, we'd drawn also, let's get the pen back up. We had also drawn, whoop, come on there. Fingers sometimes better than pens. We'd had this ascending wedge. It's not a positive pattern just because it's ascending. Convex impulses, convex impulse, and then an attempt to go up and a smack. This is soft price behavior, really, really soft. The only good thing about it, you could say, is that potentially the volume in these slap downs is slowly dissipating. So those that are truly scared and need to have panicked out, a lot of that selling has been done. So you start to base out if you make a marginally lower low. We're not wanting it to hold this line. It's much better because the lows, and you've already slightly got this, you have marginally lower lows. So what that means is you're starting to cup a little bit, but you need all that selling pressure to bleed out. All the people that thinking it's $10,000 when it was just about challenging 9 that chased in, to have properly bled out, so that the shifty, sketchy money that quickly jumps in has all bled out again. But the key worry for this is that you could have a visit right down to those levels that I referred to on the daily time frame, because you have certain head and shoulder type structure. Now, in advance of doing this video, I put some of the levels up for you, and we actually have, by method, a fizzling upside HVF. That's what this is. In other words, a steeply ascending pattern with a steep buy side under it. Often turns into a left shoulder of a head and shoulder pattern. It often turns into a left shoulder of a head and shoulder pattern because it fails to make the full target, so it produces a marginally higher high, which is a bearish thing for us. In other words, it goes higher than its high point, but not significantly so. It's the beginning of a sign of exhaustion. Remember, this has come all the way up from there, and there's that high point, and now you've come from here and you get only so much more. In terms of elevation, that's not a great advance after you've breathed and pulled back, and that's the beginning sign of exhaustion. Then you got that little fractal that you see. Up it pops and makes the small fractals point, gets killed at the key level of significance. It runs into a wall of sell orders, gets spanked. Where does it stop? A, it supports in our funnel, and B, it kisses the 8K mark. Fascinating and true. Then you get weak grinding return. and very quickly that exhausts, selling 1, flag, selling 2, and now you've broken those previous levels, little bit of a rebound, selling 3. So slowly this wave from here is dissipating, but this is not bottoming, traditional bottoming price behavior. Generally you want cupping for price behavior, and you want more evidence of hammers as candles like that. Tests down that are getting rejected. At the moment we're having weak moves up and slack downs, and that's the wrong side of the hill to be. Okay, so quite a bit of demonstration in that, and let's talk through those head and shoulder structures. What could it mean if we revert? Well, we've already triggered on this one. We have what we call the HVF Monarch head and shoulder, which is at the absolute high. We've got a left shoulder that is lower because it's an ascending pattern. So let's just do that again. A left shoulder there. That is your square top head, and then you have higher structured right shoulder that is in that convex pattern that is leaning on that funnel level there. So that's your first head and shoulder, and that's how we get that. We take it from our axis point. You'll have to learn all about HVF method to understand that, but that's our structure, and that is a 7,000 level. That is the smallest of the possible head and shoulder draws. You could also have taken the left shoulder to be, and this doesn't make the others incorrect, it's just the most conservative draw. What this means is you can have all the head and shoulders make targets, the aggressive draws and the not so aggressive ones, and sometimes just the initial ones do and then the others fail. Just because you get something that emulates a head and shoulder is not a written guarantee of performance. So that kind of pull in here, this gave this as quite a key level, and now you can see we're sitting hanging on that as a key level, and this is a weak right shoulder. It first attempted there and it's attempted there. So if that's taken as a key level of significance, it's 7,600, you end up back at the 6,100, and you can see these two lines that I put in here, the green and the red, this is your legacy major setup, which was the story of 2018 bear market, which in that instance we were accurate. We're not always accurate, but we were the sole bear calling for downside in that moment with a lot of volume by price in it. My suspicion is that is aggressive, and that would be real bearish for the price action to go through there. So that is a minority option in terms of probability. So all we do and all we can do is be probability scenario casting traders, maintaining rationality. What is the probability of a specific outcome to occur? So I could see potentially the run through here and support starting to come in from here if we're unlucky. If we're unlucky on the bear side. Like I say, you don't have to have a dog in the fight. We made a lot of money on the short side, trading short. Very few crypto engaged people did. That's a belief system. They have complete belief systems. They're not traders, they're belief systems. We're less interested in belief systems. Yes, long run, my overall macro view is it could just go exceedingly far as a number, but you don't have to ride every fall. Ergo, the bulk of alts crashing 95% and Bitcoin crashing the better part of 84-85% itself. In fact, what's 3,200 on 20k? It's not a lot. You know, you've lost 85% there. So you don't have to do that. And in fact, never mind protecting yourself, any blow off markets, you can actually back your sticks, put them in the bank in fiat, and go back to a judicious shorting and actually make money in the bear market, as a number of our community members were able to. So that's the take on that. There's a threat of head and shoulders out there, and this doesn't smell like a bottom. So you're not going to like that as news. I'm going to tell it to you as I see it. It doesn't smell like a bottom, although there's a little bit of hammering right on the here and now. But this is a very current candle. I wouldn't overweight what I'm seeing. I don't like the convexity of that. I prefer that there's none of these weak snapback rallies, and that you actually just get lower volatility. You want this to go super low. This is the volatility measures. As I showed you, the super low periods are when you're about to get an impulsive move. It doesn't confirm direction, but if we get basing out and a cupping and a nice rounding out of the price behavior, it will more likely be recovery move. If it's highly convex and it goes low vol, it could potentially be a major spill to the downside. So remember, volatility is non-directional. You have to look at the price behavior to get your direction out of that. Okay, quite a bit in that. That's crypto Bitcoin. I'll share one other thing for you, and you might not like this either because it's not the most popular token. Because it's, you know, they rub shoulders with the IMF, they called the bankers coin, they're doing lots of partnerships. You probably already guessed by now I'm talking about Ripple, XRP, and I don't care for the politics or the narrative. I'm going to tell you it as I see it. You know, you just have to have followed my Twitter feed to know that I've absolutely loved telling you that this is horrific convexity and that it was only going to go down. So we called this a short up here with these failed attempts to get away, marginally higher highs, then that spike down, the attempt to go rally, and then that fizzling. We continued to call it short, and you got absolute doming out, and it was the trade of the whole last 6 months to be short Ripple against BTC. Now, here's a key structural point, and I love this because this could mean, I mean, the bankers have taken complete control over the crypto game. So I'm interested in the narrative that could drive this. I've intentionally gone to an exchange that has had XRP against Bitcoin since the beginning of days. And I can tell you that if this turned into one mega, and for those of you that don't understand the method, anything where you get spikes and squeeze. Now, this is a little bit eccentric a one for a draw, but in crypto, they have worked exceedingly well. So in crypto, technical analysis is slightly more forgiving than in equities, commodities, and FX. And it has been very, very powerful. I almost laugh at the people that say crypto doesn't work and technical analysis doesn't work in crypto. It's like one of the best markets for technical analysis. And there's no way you could know technically, you know, there's too much manipulation. A manipulator is a participant. He is part of the volume. He is part of the buying. He's part of the selling. We called the Euro Swiss franc crash with the central bank's footprints all through the snow. So let me just say, leave that with you as a thought for all those that are doubters on TA. But this could be a super macro setup structure, and you've stopped going down. You've stopped going down. And the key point where we stopped going down against this. So I've shown you the overall move here. This could be a mega move in Ripple. So this is one we've been stalking for a long time in the community. There's so many other things that you don't get to hear about. Sorry, people are respecting me with their hard-earned. So you just get a little bit of what we prepared to feed you here on the free view. But that in itself could be a rainmaker. Now, I'm not sure it's exactly ready yet. But there's a couple of things. Every time it's gone up, it's been spanked and fizzled. But this is at such a critical level now with Ripple against BTC. And Ripple sat out to a large degree most of the bullishness recently. It's been an underperformer. And we've continued to highlight Ethereum and Ripple, the two biggest alts as potential underperformers in this major bull run. And in fact, it's more been about ABC, EOS in the top 10. Look, I don't get down outside the top 20 guys, and most of what I like to talk about is in the top 8 coins. So if there's no liquidity, I'm not interested. The fact that you can do a 10,000x, but the point is if you can't get out, you can't sell more than a couple of Bitcoin, it's useless to me. It's useless to me. You don't want to become the market. I had a penny stocks trading experience many, many years ago. I don't need to be there again. The top 8 is all we care to talk about. And the 2 and 3, as I say, I've been slightly down on, particularly Ripple. So to be talking about them now, almost there may be something brewing, It's not my natural go-to message. Now I would suggest that this squeeze is not over yet, and that you could, in fact, it's got an exceedingly low volatility, by the way. That was high, as you can imagine, following that spike up, been drifting down, high again, drifting down, much more. It's getting really tight. Now, what I suspect will happen are two things. I do think there will probably be an up move, but the problem for most of us will be, instead of going straight out of this fractal here into the up move, it may do this. That's option, let's call it A. It could first do, let's clear that and make a thinner pen. That's option A. It could also turn this into a tabletop, what we call second impulse, and do a down leg like that. So we have that, and that. And then give you what we like to call our third, and then squeeze up. And that will be your structure. In other words, this is quite steep the way it is drawn. Let me clear. This is quite a steep move. It sometimes needs more time. Our situation is that fractal is disproportionately small to this impulse. So sometimes the pattern extends. How does it extend? It squeezes and drifts off a little bit, and then comes with a bigger third. This is a second, and that is a third impulse, is a little small and a little bit high slung and steep. So there's been, again, maybe a bit too much buying here. There needs to be a little bit of relief, a little bit of loss of attention for a while, the volatility to go even lower. Now, this would be a first setup in a new trend. That means it overperforms target in general, and it could overperform substantially if it turns to be the upside. It could also be a downside, but I would point to this momentum and that drift, and that momentum and that drift as being indicative of it's finally stirring. It's finally stirring in its underperformance realm. Let's take you to the 1 hour and just get a little bit more of that detail. It's finally stirring, and it is going really low momentum. Impulsiveness, very low impulsiveness. If we get our draw tool back and go thin again. So you kind of have structure like that. You have structure like that. You can see the buying coming in, a little bit of a falling wedge that gave you your push up, and then again those hammer wicks, and then it's given you your push up out of another falling wedge, and now cupping out. So it could go from here, pull back and go, but it's probably going to need permissioning from Bitcoin. So Bitcoin has to not be dying. It can be languishing but holding its own, drifting up, or strongly up, allowing this to be further strongly. I don't see Ripple having inverse correlation to Bitcoin. In other words, if that head and shoulder scenario comes and plays out, we go into the down dip first for this Ripple trade. Okay, so now you know where we stand. So much more that we're discussing in Crypto Sniper, Market Sniper. The equities have been insanely good. Shorts have been paying all over the world. You can come and be part of a member of our community if you like, but you've got to learn the method fully and completely. By the way, just by watching these videos, I'm sorry, there's so much more. Guys that think that they've got it from trading the videos, guys that think they know how to draw. I'm glad for you. I'm glad it's giving value to you, and I'm glad if it's helping you. But you haven't got the half of it. You need the details. Absolutely matter. When you're stacking very small edges up on each other, not taking an obvious failing trade to us is one less loser, and selecting one that is slightly better or increasing your sizing on a really, really good one is the night and day in your performance over a period of a year. Forget what you get for free. The real value comes in knowing exactly how to implement. And that's all I can say on that point. I hope you enjoy the update on crypto. It's a lengthy one. Haven't spoken in a while. My throat was a bit gammy. And that's where we are on the world of crypto. Caution on Bitcoin. For now, potential for Ripple post Bitcoin basing out, doing whatever it needs to do. Okay, bye for now. And you know this marketsniper.com website if you wish to chat further with us about coming on board. Speak to you all later.